So we are off to a great start today. For those of us who are at the sessions, the many, many sessions yesterday, it's hard to believe that we're still just, this is the morning, first official day, really, of NACW, right, in the conference. And we have already had a packed morning with Chair Randolph and Chairman Benham, which was fantastic, actually. Kind of sets the stage. Obviously, we're going to be diving a bit more into California and the market measures and other activities that are keeping California Resources Board busy. But it was also nice to have Chair Benham's take on what is occurring for the CFTC and the voluntary carbon market. He kept saying the word bumpy. Bumpy, wobbly, a bit challenging. I think importantly though, and a segue to what we're going to be focused on, these are not disparate worlds anymore. The voluntary space and what is occurring in the voluntary carbon market space with respect to integrity and guidance and regulation, it is or it could heavily impact the compliance markets, right? So we can't just divide these anymore. We have to think even about information, communications, good, bad, and ugly on the voluntary carbon market side and how it could impact, rightfully or wrongly, the compliance systems, right, that have been around for quite a while. So I'm Katie Sullivan, Managing Director at IETA. I don't know about illustrious Craig, but it is my pleasure to moderate this session and dig deep into the compliance markets across North America. We will have other sessions later on that dig deeper into Washington and Reggie and Nikki, New York, but we'll be focusing primarily on California, Quebec, the WCI market, Canada, Judy, federally at least, and then we'll go to Mexico, Latin America. So specifically, we have Rajinder Sahota, Deputy Executive Officer for Climate Change and Research, California Resources Board, known to many, loved by many. You do a lot of work. Jean-Yves Benoit, Director General, Carbon Regulation, Emissions Data, Climate and Energy Transition Bureau, Quebec. Eduardo Piquero, CEO of Mexico CO2, and Judy Meltzer, Director General, Environment Canada, and Climate Change. So let's start us off. We want to make sure these programs, and IETA and my team, we work extremely hard to keep track of all the activities across carbon markets globally, all 60, 70 plus of them now that crop up. But those that really are, critical, and they've been around for a long time, we have Europe, and then we have WCI. And WCI, you have 11 years individually, Quebec, California, 10 years anniversary of the linkage, so congrats to that. And they're both going through some really, really critical periods around the future and the role that cap and trade will be playing in achieving the longer term targets and ultimately 2045 carbon neutrality in California, Rajinder. So we're also eagerly awaiting some kind of updates about just the rulemaking for cap and trade amendments this year. So I'd like to pass it to you with a very sophisticated, broad audience of market participants, right, and beyond, to give your take on the latest that's happening in Sacramento with respect to the California market and what is coming up on the cap and trade rulemaking.
Thank you for that introduction, and it's a pleasure to be here, and it's really great to be here in person for our 10-year anniversary of our Linked program with my colleague Jean-Yves, and also good to see my colleague Eduardo here. So I do want to first talk about NACW. I remember coming to my first NACW about 11 years ago, and it was at one of those events where I remember sitting across the table from Jean-Yves, and we were just talking about linkage. And 10 years later, which went by really quickly, it's great to be able to look back and think about how two different currencies, two different primary languages can find a way to make these complex markets work, but also evolve together. And right now, what we're talking about in California and in Quebec is evolving our markets together. And what we want to see really happen is getting back to our rulemaking by the end of this year to make sure that we are able to give the longest runway to make the program more stringent to support a more stringent 2030 target. That is also true for our low carbon fuel standard. The goal is to get both rigs back to the board this year to get those market signals in place as soon as possible, because we know there are federal grants and incentives that can be utilized by the private sector to then help California clean up its air and to reduce its GHG emissions. So with that as the background, there are a few things that we're looking at, and I don't think our slides are going to make it up. That's okay. As Chair Randolph alluded to, we have three options, and this is a threshold question for California. Are we going to...
Wrong slide.
It's
Sorry.
okay. It's okay. Update for 40% by 2030, 48%, or 55%. That's significant in terms of the cap declines. Right now, the cap in the cap and trade program is declining at about 4% each year. We're talking anywhere from 8 or 9 to 14% for the remainder of this decade. And that means the program has to think about leakage mitigation, it has to think about cost containment, and it needs to also think about the concept of affordability, because climate action is not going to be free, but the cost of inaction is far worse. But what people see as costs today are being exploited by the fossil industry that still remains entrenched and wants to keep its market share of the energy economy. And so for us, it's making sure that these programs are evolving in a way that actually benefits Californians. And that is about making sure there's $100 billion invested in clean fuel subsidies and in transit and in guardrails in California for transportation uses. That's getting off of diesel trucks, it's getting off of diesel locomotives. So all of that is real benefits that Californians can see when those communities are located adjacent to the freight corridors. For cap and trade, there were early conversations about how markets hurt or concentrate air pollution in communities. Well, 10 years later, after linkage and having the program in place since 2012, there's significant data for the program that is now available. Studies have been done and show that there is no way that the cap and trade program in California is concentrating air pollution in communities. But that kind of line of thinking will persist, those comments will persist, because there's a fundamental dislike of markets. But the problem with the fundamental dislike of markets is there's very few ways to get the private sector to engage in the things that we know we need to have happen. Government doesn't have all the money, and so markets play that bridging role in California for us. We send the market signals, we provide an opportunity for people to invest. We have, as the administrators, we make sure that the programs are steady, there's certainty, and that there's some confidence that when these markets are put in place, that they're going to be around and persist for a long time. This market has persisted through the 2020 conversations. We're going to start the discussion about post-2030. We're going to use some of the data that we're doing in our modeling right now to talk about how 2030 and post-2030 look. One of the things that's often been laid out about the California program is the volume of unused allowances, the banked allowances. Those are emissions that didn't occur, that could have occurred, and we could have still hit our target. That also represents early investment in the program, where those monies were used to invest back in our communities. But that piece about unused allowances, which is about 5% of the overall program through 2030, is that banked set of allowances is going to help us ease into and transition into a steeper program and increase ambition. And so we're not looking at the problems that everybody was very vocal about, and it's very few but very loud voices. We're looking at how those perceived problems are actually going to be the benefit in helping to actually increase stringency, which almost everyone in the conversation that we're in wants to see is an increase in stringency. The one final thing that I'll make a comment about is that the dialogue will have to happen. We'll have to retread some of the conversations that we've had before. We know that that can add some kind of uncertainty, but we still see the value in things like offsets. Compliance offsets provide a way to get private sector money into sectors that are not capped. It's important because we need those sectors to also contribute to reducing emissions. We know the voluntary markets are proliferating out there. We know that there's a lot of standards. We see all of this happening. We also see how some of the cautionary tales from the voluntary markets are being used to attack the compliance offset markets. And so we do want to be mindful of some of the legislation that's coming through in California and make sure that that legislation allows markets to exist. It allows offsets to exist in both the voluntary and the compliance market space. One final point that I'll make before handing it over is on just the no trade zone conversation that's going to take place in California. Again, every time we update this regulation after we finish a scoping plan, everybody takes a step back, they think about where the program is, does it need adjustments? We're very deliberate and do a lot of analytical work when we think about adjustments, and we partner with Jean-Yves and his team to make sure that we're still in sync. But there are a lot of people who feel like from day one, something else should have been the tool on the table. And we have many tools in California. We continue to believe that the cap and trade program is a vital part of the toolkit moving forward. And so with that, I'll turn it over and wait for the discussion.
Chef's kiss, that was perfect. You nailed a lot. Maybe one thing before we go to Jean-Yves is clarity on CARB can do LCFS and cap and trade rulemakings simultaneously.
Yes, we can do multiple rulemakings at the agency. We do it all the time. I think there's an effort to try and link LCFS with cap and trade because people don't like the fundamental trading part of both the programs. But LCFS is more intertwined with our ZEV regulations, our zero emission vehicle regulations. It subsidizes the fuel. It makes those regs pencil out in terms of cost of ownership. It needs to move because it's the final stop in the ZEV story for California.
Right on, yeah. Thanks, Rajinder. Okay, let's go to longtime friend, partner of California's, Jean-Yves. And I mean, you've been around for a while. I mean, back into the deep design recommendation days of WCI prior to the actual launch, again, of your individual programs 11 years ago. So Quebec obviously is also in the throes of looking at amendments to Quebec's program right now. Maybe a quick update just about, for those who maybe are not tracking it as closely as, say, California, but the Quebec program, how it's going, the broad support, right, that it has, but then go into a bit of the deeper stuff related to the amendments that are on the docket this year.
Thank you, Katie. I do remember 11 years ago. We were young at the time.
I'm still young. Shame on you. Craig was talking to me when he talked about young people earlier.
Now things changed a lot. Carbon market are now mature. At the time, we were early movers. We weren't that sure how successful it could be, but we spent much time working with other jurisdictions, other governments that implemented carbon pricing. I'm thinking about RGGI, I'm thinking about the EU ETS. We learned from their mistakes, we learned from their good decisions, and I think we built a more robust cap and trade program which delivered mitigation. The goal is to reduce greenhouse gas emission right from the start. It's not to put a price on carbon. Putting a price on carbon is a tool to help achieve our mitigation goal. So over the last decade, we now have a program that has been running for 11 years. It is robust. Robust prices, pretty stable over time. Yes, it fell a little bit during pandemic, but it came back very fast thanks to the different measures that we put in place to control prices. Prices started getting above minimum auction price over the last 2 years. And we are seeing that we're going to keep having a robust price in the upcoming years in order to further reduce greenhouse gas emission, get investments. Few good things. Ever since we started the program, emissions are down 9%. We did achieve our 2020 mitigation goal. It was 20% below 1990, thanks to the carbon market and exchange. We achieved minus 26. So basically half of the mitigation was done within Quebec, the other half was done through the market. Industry, covered sectors, industry is down 22%, buildings down 38%. Transport is up, yes, 20% above 1990, but over the last few years, we saw a stop of that increase in emission from the transport sector, and with all the different stats that we're looking at in the upcoming years, it's going to start decreasing. Thanks to the cap and trade program, it's almost $9 billion Canadian since 2013 that we are reinvesting in our economy to transform it. We have half of the electric vehicles in Canada are in Quebec. We have the largest charging network. We are building a new economy with batteries for electric motors, electric cars, electric buses, electric motorcycles, electric ski-doos, boats. It is really a new economy. We are really changing the fundamentals of our economy to get it less dependent on fossil fuel. I heard a lot back at the time that we would kill the economy. Quebec almost always had one of the strongest carbon price in Canada over the last decade, and we kept having a strong economy. So this is really a good sign that yes, you can reduce greenhouse gas emission and grow your economy. You just have to do it a bit differently. Cap and trade did work. It delivered. We're looking for the next 2 decades in reaching net zero. Cap and trade will remain a strong tool to fight climate change, to achieve our mitigation goal. We undertook pre-consultation last year in order to tweak our cap and trade regulation just to make sure that it stays robust, similar to California, and our team talks to each other on a weekly, if not daily basis. We are planning to complete that reg change throughout the year to make sure that it stays a really robust tool to achieve our mitigation goal. I'll stop here for now.
Okay, but I'll come back to you. So Eduardo, where do we start? Do we go, let's do an easy one, state of the National Emissions Trading System operational, question mark, when, and then I want you to, well, at least for those tracking the many elections globally this year, there's a lot going on, and it's a critical year across numerous jurisdictions, including the US, but also Mexico has an election coming up in June. So your take on just the candidates, their platforms, possible futures related to climate broadly, and the carbon market pricing ecosystem, and at even a national leadership level specifically.
Wonderful. Thank you very much, Katie, and thank you very much, Rajinder and Jean-Yves, truly inspirational leaders. And one day Mexico will get there, definitely. That's our goal.
There's a lot going on subnationally. We'll get to that, though.
Well, and very luckily, this year, this administration in Mexico comes to an end. It's been a not very active administration in terms of climate change, at least, if not working on the oil and gas part of the agenda, for sure. But fortunately, something's been going on subnational. Let's come back to that later. But at the national level, Mexico has an emissions trading scheme, a cap and trade, that's been during a pilot phase for 2.5 years, if I'm not wrong, and we're still awaiting from the Ministry of Environment the secondary regulation for the full operational phase. My take is there is not political will nor capacities to have that secondary regulation during this administration. So if something comes out, it will come out during the next administration that takes oath in October. So we might hear some good things in Mexico, but definitely not that during the next couple of months and during the campaign. There is also a very draft secondary regulation for voluntary forestry projects that it's been released or shared by the Ministry of Environment, still rejected several times, and my bet is that we will not have that regulation either.
Draft voluntary carbon market regulation. That's
Correct, correct. And there's been several drafts already. So with that in mind, Mexico is facing elections in June. I think it's June the 2nd. So Mexico will have its first ever women president, that's for sure, because we have two women candidates that are leading the race. One is Claudia Sheinbaum. She's the part of the current president's party. So she's been elected to be the candidate, and she's been also part of the IPCC. So she's also a climate leader. We are uncertain of her position on carbon markets, though. But what we have heard so far from her campaign is that they have at least a view on, and they are active in energy transition. Campaign has just started 15 days ago, so we still know very little about what they want to do. She's leading the way, 30 points, around 30, perhaps less, to the runner-up. She is, her name is Xochitl Galvez, a very difficult name. Yeah.
I was going to try to say it.
It's very difficult. And she's working on a sign and everything. And she has a more active position on, in general, renewable energy, carbon markets, and so forth. If I am to say, we're definitely going to hear a lot more on climate during the next administration. Yes, it is uncertain. It's still the degree of separation between the current administration and the following one. But my belief, my bet is that we will have a more friendly environment towards climate action in general in Mexico. So hopefully we're going to hear more on the federal administration. On the subnational level?
Jenny, there is a great map that Eduardo had. There's one slide. Can we put it? Yeah.
Exactly, that one. I was going to leave that for later, but on the subnational level, we do also have some elections. But in the meantime, since we don't have the ETS, the cap and trade system working, several states in Mexico adopted a carbon tax, and in some cases they can be covered using offsets. So the importance of offsets is it's out there. Mexico needs more and more offsets. So that's a topic for the future, the relation between Mexico and Article 6. It will have something to do with the current administration, with the next administration, sorry. So 8 different states in Mexico do have a price on carbon. I'm going to name them for you just to take a look. It's Yucatan in the beautiful peninsula, the state of Mexico close to Mexico City, Durango and Zacatecas. There are mining states, Guanajuato, Querétaro, Tamaulipas, heavy industry states, and the state of San Luis Potosí was the latest to have a carbon price adopted. At least 3 other jurisdictions are considering or do have carbon pricing proposals. Again, the only ones to accept offsets are right now the state of Querétaro, which has as you can see over there, a figure that was already compensated. It should be something around 1 million tons. That's not a large market, though. Another state is adopting exactly the same framework, the state of Tamaulipas, close to Texas, and the total amount of offsets could be significantly larger from that state. So we're going to also face elections in some states, but let me tell you that these 2 states, they don't have elections, and their current governments will be there for at least 3-4 years more. So there is a lot at stake right now in Mexico on the elections. I'm pretty sure we will hear more on the ETS. And one more thing, we're going to hear more about private companies. Private sector in Mexico has been reluctant to compensate emissions, has been reluctant to enter into an emissions trading scheme, and we need to have them in if we are going to face a new administration. So that's key for the future of Mexico.
Thank you, Eduardo. I always love hearing your updates, and there's so much activity that's bubbling up across these states. It reminds me a bit of Canada. And before I do, I always get blown away by, like, those are some pretty stark price differences there. And like Querétaro, this is US dollars, by the way, and you have, what, $38 in Querétaro? So that is great. So the bridge to Canada, let's do a stock take on what's happening up north. You're an absolute heartbreaker, Judy Meltzer, not coming down again to NACW. I know you'd be here if you could swing it. All I ask is that it is as balmy in Ottawa as it is in San Francisco next week when I come to Ottawa. So Judy is in the trenches working very, very hard with her team, and some of her team are actually here in San Francisco and will be on panels later on. But Judy, why don't I pass it to you? You can start us off on the carbon pricing landscape and the OBPS and updates there, but then we have some really major measures that you and your team are tackling right now federally, climate measures where there's some real potential, let's say, market hooks in some of those big measures. So I'll pass it to you, and we do have the Canada map as well that we can throw on the slide, hopefully, Judy. Over to you.
Great, thanks very much, Katie. I'm very sheepish and disappointed not to be there in person. I will commit to being there next year, and I'm delighted to have Ava Burton and Amanda and other folks from our Canada's GHG offset credit system team on the ground there. So yeah, definitely not wish I was there in person. Yeah, so that's right. So I'll provide just a really brief kind of a quick update on our various compliance credit markets at the federal level, those that are existing and in place and those under development. So I'll start with carbon pricing, and just briefly for context, carbon pricing is, of course, a pillar of Canada's emissions reductions plan. The plan includes a whole range of other investments, incentives, regulations, and measures, but pricing is a pillar. So taking into account the fact that carbon pricing and emissions trading systems have been in place at the subnational level in Canada and Canadian provinces at least, such as Quebec, of course, as well as Alberta and BC for over a decade, the federal approach enables subnational governments to implement and maintain the type of carbon pricing system that works for their circumstances, whether it's a direct pricing system or an emissions trading system. And all systems are aligned with common minimum national stringency requirements that are set out to 2030. We refer to these as the federal benchmark just to ensure that systems are comparable and effective. And this includes a minimum carbon price that rises out to $170 Canadian in 2030 for direct pricing systems. So the federal carbon pricing system serves as a backstop of sorts. So it includes a fossil fuel charge and a trading system for emissions-intensive trade-exposed industries, which is the OBPS system, output-based pricing system. And it applies where requested, so where a province or a territory prefers the federal system versus implementing their own, or where there isn't a system in place. And both parts, this one or both parts of the federal system can apply in a jurisdiction. So it could be either just the federal fuel charge or just the output-based pricing system for industry, or in some cases both. And currently, through the mix of federal, provincial, and territorial pricing systems, 80% of GHG emissions in Canada are covered by carbon pricing. So this is probably a good time, Jenny, I don't know if it's possible to put up the slide which shows our current landscape of mix of pricing systems in Canada. And I won't go through them province by province, but I think what this slide, if it's up, shows is that most provinces in Canada actually have a mixture of systems. So most of them have a combination of the federal fuel charge combined with a provincial trading system for industry, an output-based pricing system. And maybe I'll just note, just building off, I think the important earlier comments around affordability, where the federal fuel charge applies, 90% of the proceeds are returned directly to households as a rebate. So this supports affordability, and that's the intent of that approach. And the majority of middle and low-income households, in fact, receive more back than the costs they incur. But these rebates are structured in order to ensure they nevertheless maintain the price signal, and that where a household or individuals are able to reduce emissions, they can come out further ahead. The remaining 10% of proceeds from the federal fuel charge are returned to Indigenous groups, farmers, small and medium enterprise through a range of different programs. and all of the proceeds go back to the subnational jurisdiction where they were generated. Of course, Quebec and British Columbia, as well as the Northwest Territories, fully implement their own carbon pricing systems. The federal system does not apply in those jurisdictions. So most provincial industrial pricing systems, the ones that have output-based pricing systems similar to the federal one, as well as our own, were updated last year to ensure that they maintain a strong marginal price signal and credit demand in the market. And this is particularly important as we look ahead and see various measures and investments and other regulations coming online that will further incent reductions. We want to ensure that our markets remain robust, even as emissions further decline. So on the federal side, as an update, we published amendments to our industrial pricing system last fall in 2023. And this included a 2% tightening rate for most sectors. We made some adjustments for those sectors that are at significantly high risk of carbon leakage, but the majority saw a 2% tightening rate annually. So let me turn briefly to Canada's GHG offset credit system, which we launched in 2022. So this, of course, is a compliance offset system, and it aims to incent reductions and removals from activities that are not incented by pricing, and of course are beyond business as usual and legal requirements. And Katie, as you mentioned, I know it was going to be either will or has provided more detail in a separate panel. So I'll just give a very high level update of the status of our work under the system we're really excited about. So I should just clarify that credits from Canada's offset system can be used for compliance with the federal industrial trading system. They're being considered as a compliance option under the oil and gas emissions cap that we're in the process of developing, and I'll turn to that shortly. But there's no limit on who can purchase federal GHG offset credits. So I'll put that out there as a little bit of a pitch. And we do expect there will be increased demand from outside of regulated sectors, including from, to meet corporate net zero targets, other green and government objectives, et cetera. Of course, environmental integrity is key, so the reductions and removals must be real, quantifiable, additional, verifiable, and permanent. So we provide the broad requirements to participate in the system and regulations, but the project-specific requirements are set out in protocols. So for example, how to quantify for particular project types. And we're publishing these and developing them on an ongoing basis. So this is an evergreen process, and we've published 2 final protocols to date. One for landfill methane recovery and destruction, and a second one for reducing emissions from refrigeration. And we've got a few under development, and they're at different stages. So the one I'll highlight is that we are in the process of finalizing a protocol for improved forest management on private lands. So that should be finalized hopefully certainly over the coming weeks and certainly this spring. We've also published a draft protocol for consultation. That period has ended, but we published it in December for reducing enteric methane emissions from beef cattle. So we're working hard to finalize that. And we are also in the process of developing protocols for direct air, for DACs, direct air carbon capture and sequestration, enhanced soil organic carbon, avoidance of manure methanes, emissions, including through anaerobic digestion. And I won't go through the whole list, but this is something that we'll continue to keep public and posted. And I think we also want to make sure we're doing a really good job about communicating what projects and protocols are available.
Wait, Judy, can you hear me?
Just turn, yeah, sorry, I know, Katie, I'm eating up a lot of time. I was going to turn very quickly.
I just want it to be crystal clear what you just said, and I know Eva's probably going to talk about it more, but this will be really one of the first national compliance offset programs, can be used for compliance purposes, but beyond. You have 2 final protocols, ODS destruction, landfill gas. You have draft coming for IFM for private lands coming soon to final. And you have draft DAC, direct air capture and sequestration, that's what you're calling it. That coming soon, manure methane coming soon, and the livestock beef cattle. So I just wanted to be very clear about that in the room. We have a big room, Judy. Okay, so oil and gas emissions cap.
Well, yeah, and actually just to confirm, no, but thanks, Katie, and I'm trying to make sure I leave time for questions, but it is really important to make sure that we're really clear in what we have. That's right. We have 2 final protocols already out there, landfill methane and refrigeration, and we are in the process of developing others. Those that are going to come first, we see the enteric methane reduction from beef cattle, and of course, improved forest management on private lands. That is imminently final. And we are also in our pipeline, just to add to that list, in addition, as you say, on developing improved forest management on public lands, which will be a next focus. We are also considering developing a protocol for bioenergy, carbon capture, and sequestration. So lots in the pipeline, and we will continue to keep that pipeline evergreen. And we also welcome input in that regard. We have a booth set up there as well, so I'm really hoping people can swing by the booth and they can get a lot more detailed information on that very quick overview that I've just provided. So really encourage people to visit the booth. It's our first booth, so we're excited about it. Let me maybe just a heads up, Katie, I'm not going to get into the clean fuel regulations in the credit market there, but we do have a national clean fuel regulation system in place, and it works in similar ways to other initiatives requiring producers and importers of gasoline and diesel to reduce the life cycle carbon intensity for fuels used in Canada. And it enables credit creation both from regulated parties and by voluntary participants in different ways, including from projects that reduce GHG emissions, from low carbon intensity fuel supply, and also from supplying fuel and energy to advanced vehicle technologies. What I want to flag is we are hoping to release public data on the credit markets. We want to report out after we have a full year of data, so that'll be after April 30th, and we will expect to be publicly reporting out in detail on that credit market this summer, so that's something that we're really looking forward to be able to be giving that update. So a bit of a stay tuned on that one. Okay, to the oil and gas emissions cap as a final point. So our emissions reductions plan in Canada also does include a commitment to cap emissions from the oil and gas sector, which is Canada's highest emitting sector. And the aim is really just to ensure that these emissions decline at a pace and scale to put us in a position to achieve net zero in 2050. And we really are clear in indicating this is a cap on emissions. It's not a cap on production. This is very much under development. So we published an initial discussion paper on an approach in July in 2022. And this past December, we published a regulatory framework for comment, and it outlined a cap and trade system as the proposed approach to setting this emissions cap. So we've just wrapped up the consultation on the regulatory framework, and we continue to work to develop the design details of the approach. We do expect to be publishing draft regulations this year and targeting final regulations in 2025. And this is would be something that would be phased in between 2026 to 2030, but really the kind of the design details are still under development. So this is another one to stay tuned, but happy to answer questions. And I'm going to leave my comments there and look forward to providing further clarification on any of the above. And apologies, that was a bit of a whirlwind tour.
There's a lot going on. Thank you very much, Judy. I know it's always challenging to participate virtually in things like this, but it was clear, well received, and hopefully you can stick around. The clock is ticking pretty fast, and I have some quasi-lightning round questions for the panels, but it is kind of bright. Can I just get a show of hands for people who have questions and comments so I can just get a pulse check? Okay, great. Get ready. But not yet, but get ready. And we do have some roving mics. So, Rajinder, let's go to, again, a few questions that I'm eager to hear, and I'm sure others are as well. With respect to just the 2030 extension of the program, right? And the possible avenues, pathways, CARB authority, any kind of further details that you can provide on expectations for that.
Sure. So we believe we have broad authority under AB 32 to have the program keep going after 2030. AB 398 sets certain design features of the program in statute from 2021 to 2030. Once that legislation sunsets, it doesn't revoke our authority under AB 32. But because the program is so expansive and it gets so much attention of all the dozens and dozens of programs that we have at the Air Resources Board, we know the legislature will want to weigh in because it generates a significant amount of money that is used to fund legislative priorities. And so they're very acutely aware of the program. They want to understand, what we're doing in terms of cost containment, what economic impacts that there might be, what the benefits are. So we have started that conversation. There's been 2 oversight hearings in the legislature this year already. Matt Batil, who's the division chief for the Industrial Strategies Division, participated at one. I was at the other one. And for us, it's always funny because I think people forget that there's post-2030 caps already in the existing regulation. It's just not a table, it's an equation.
It's not a table, it's an equation.
Yeah, it's in there. But as part of the modeling, we're looking at post-2030, we're looking at how you increase stringency towards the end of this decade and how that dovetails into the 2045 targets in statute. It's carbon neutrality in 2045 and an 85% below 1990 levels for the sources mostly covered under the cap and trade program.
So let's kind of pivot a bit because, and this will probably be short and sweet, but I have to ask about the big climate disclosure laws. And I know there's a panel that'll be coming up later today to just talk about disclosure stuff. But provided funding comes, that would then require a huge amount of effort for CARB and your colleagues around implementation, the rulemaking consultations for 253, 261. So do you want to quickly elaborate on that?
Sure. We haven't yet received resources. All of the budgeting for all of the bills that were signed last year has been deferred until what we call May revise. And so hopefully as part of that process, we see the resources come through. We're already exploring ways that we can start getting information that can help support an eventual rulemaking. So we may be doing some informal, requests for information kinds of outreach in the coming months, getting ready for when we have staff that can start going through all of the information we get and formulating rules and regulations. Right. But the deadlines are tight. Anyone that's worked in government knows that even if you get resources, it's probably anywhere from 9 months to actually hire somebody. And then if it requires an IT system for digesting reports that are coming in, it could be up to 3 years for that process, depending on the path we get locked into for procurement laws. And so we're trying to figure out what a quick path would be with the deadlines that are in the statutes that are in place today.
It's intense, it's a lot.
Yeah.
Okay, Jean-Yves, before I want you to speak to WCI Inc. and just broader cooperation. But before I do, going back to the question about some specific amendments you're contemplating or just new design elements and programs that Quebec is. So there is a removal purchase program that's being considered right now. And there's also some possible changes offsets-wise that is under consideration for Quebec. So can you speak to that a bit?
Yes, I can. Well, many things we are looking at in doing a review of our cap and trade program after 10 years, and many elements we discussed with California. On one side, the first block, it's really market data information. We are already publishing a lot of market information. Can we do a bit more? We need to balance protecting confidential data from industry and being as transparent as possible. So nothing has been decided yet, but we published a series of new information that we are thinking of maybe publishing extra. The second one is really all the, I don't like the word excess allowances, but banked allowances in the system. Thanks to the carbon pricing, to our climate action plan, both in California and Quebec, we have extra banked compliance instrument in the system. What do we want to do? We may move forward by removing some of it just to make sure that the cap and trade program stays binding towards 2030, 2040, 2050. So that's the second big part. If we reduce the caps or adjust the caps, all the question of price containment mechanism. You don't want to remove compliance instrument from the market to put them back in through the ceiling price mechanism the next day. So we'll probably need to do some adjustment. And when in Quebec, we are working with our Ministry of Finance, we build an economic model, so we are crunching numbers to really understand what could be the dynamic of different scenarios here. The other bucket is offsets. We are a small-scale economy in Quebec. We are not generating a lot of offsets. Small-scale economy, small projects, we have robust offsets, but it costs a lot of money. Third-party verification, just making sure the accounting of the mitigation, third-party verification. So what we are thinking, we are trying to find ways how can we increase the number of mitigation projects that takes place in uncovered sources. So this is one goal. We want to maximize mitigation in Quebec to help transform our economy. The other one, offsets are issued on top of the caps at the moment. So we are offsetting, we are not reducing. Yes, one reduction in uncovered sectors allow to emit 1 ton more in covered sectors. So we are not moving forward towards achieving our mitigation goal. So different options that we have in mind. One option is what Washington State is doing. So bring the offset within the caps. So if you issue one offset credit, you remove one compliance instrument from the caps. The other one is probably just to transform offset into a purchase program. So keep the offset protocol, keep the projects in place, but use the cap and trade revenues to buy those mitigation on a yearly basis for project that took place in Quebec, then retire those offset credit to help achieve our mitigation goal. So no decision is made at the time. We are under consultation. Yeah. We're looking at different options at the moment.
Expect people to want to talk to you more about this after. So maybe we can tag team a little bit here because, like as I said, so WCI Inc., you're not only the chair of, newish chair of the board for WCI Inc., Jean-Yves, you're also the chair of the Carbon Pricing in the Americas Declaration Initiative. And how many people know about the CPA, Carbon Pricing in the Americas Declaration? See, not too many. CPA,
yeah, many.
New acronym. But talk about the pan-hemispheric, talk about just the role you're playing, and I mean, Rajinder, you can come in on this as well, but like the role you're all playing in kind of expanding the best practices, lessons learned across the hemisphere, really. And let's say for WCI Inc. first, some of the like priority work that you're doing and the outreach and kind of expansion for WCI Inc.
Thanks, Katie. Maybe two things. WCI Inc. is a nonprofit that was created by, well, California, Quebec, at the time Ontario and British Columbia to support our cap and trade program. It's basically market infrastructures. By sharing the infrastructures, we are saving costs, so economy of scales for governments, but also a more robust oversight of the of a carbon market. We learned from the EU ETS back at the time. Each country had their own registries. Registries were not talking that much with each other. There was a huge fraud. We decided to have only one common registry. Lately, we made a decision at the board of directors to open the scope. At the beginning, WCI Inc. was services provided to North American governments, national and subnationals. We are opening it to the Americas. And that's somehow a link to carbon pricing in the Americas. I have the privilege of co-chairing with Panama a forum of government really that aims at sharing knowledge, promoting carbon pricing, helping each other in developing and implementing carbon pricing scheme. Similar to what you are doing at IETA with different governments, similar to what Eduardo is doing, helping different governments implement carbon pricing. So with CPA, we are working together, sharing, it's really exploding. Eduardo's slide, we're seeing it is exploding everywhere in Mexico, but it's true in Latin America. Thinking about Chile that is moving, Colombia that is moving, Panama, some Caribbean countries also. So we are, well, first we are helping each other, but then once will come the time to start implementing those carbon pricing scheme, governments will need strong, robust infrastructure to support the market, and that's probably where WCIA can come into play. If we are all using, and this is kind of a vision I've been having for years, and we are slowly getting there. But the goal of, the Western Climate Initiative at the beginning was to build a foundation of a North American carbon market, and now why not an American carbon market? So if we are using the same market infrastructures, registry, auction platform, we are one step closer to facilitate linking interaction between all those different instruments. And I'm not saying that it has to be the exact same cap and trade program that Quebec, California has put in place. It could be a tax and credit system in Querétaro, as long as it is a robust system. The broader the market, the more efficient it becomes, the more low-cost mitigation we can get. So it is a way to increase ambition while reducing global cost of achieving our mitigation goal. So many things that will happen in the upcoming years. I probably still have a decade before I retire, so I'm really looking forward to see what we will talk about 10 years from now in this room. It's going to be completely different, honestly.
A lot can change. A lot can change.
A lot will change.
And I think, and Eduardo, we're running out of time, and I do want to tee up Judy very briefly, but Eduardo, I want you, because you are in the trenches of, it's not just Mexico, it is across, it blows my mind. This is saying from IETA, you know, the activity that's occurring and being involved in so many different pockets of activity across so many jurisdictions, like you and the Mexico CO2 team, it's outrageous what you're doing right now. And so you being in the trenches, maybe speaking to like the most authentic messenger in the world, how many of these governments are actually looking to what Rajinder and Jean-Yves, California and Quebec have built over the years?
Well, it's quite a task, thank you. In addition to Jean-Yves, let me remark you, more and more initiatives are evolving throughout Latin America. We do have also an initiative in Argentina for an ETS. Also the province of Córdoba, who is right here, they're also thinking what to do, that's in subnational state in Argentina. And we're trying to get them there, right? Brazil also has an ETS law in place. There is a lot to do not only in infrastructure, there is a lot to do in capacity building. I think that's the most important need right now in Latin America and throughout the world. And let's leave it there.
Right on. So if the patient 2 or 3 hands that I saw up, okay, and who's running the mic? Okay, thank you. Okay, just 1 second before. Judy, can you say, because the other GCPC, how many people know about the Global Carbon Pricing Challenge, GCPC? Okay, not a lot of hands, Judy. I know you can't see the room, but just a minute on GCPC and the role that Canada is playing around this major priority initiative for you guys.
Thanks very much, Kitty. Yeah, no, and it's a nice segue off the hearing the updates around the carbon pricing in the Americas, because very similar in terms of goals. So the Global Carbon Pricing Challenge was launched by Prime Minister Trudeau at COP26, and it calls on countries to adopt carbon pricing, explicit carbon pricing as part of their suite of climate policies. And it's got an ambitious collective goal of having 60% of global emissions covered by carbon pricing by 2030. It's made up of country partners as well who are already and committed to carbon pricing, combined with supporting friends who are contemplating pricing, and also supporting international organizations, so World Bank, ICAP, IEA, OECD, et cetera, working in this space. Country partners right now include UK, Chile, New Zealand, Korea, Germany, Norway, Denmark, Sweden, and the EU. Côte d'Ivoire has joined as a friend. And similar to the CPA in the Americas, it's looking to expand carbon pricing and support implementation of carbon pricing globally. So obviously we're really excited to be able to continue to increase collaboration with the CPA and learn from their experience to date, and look at expanding carbon pricing in other parts. And there's a lot of interest. We have a lot of interested potential future partners and friends in Africa, in Asia, and similarly looking to find ways to bring countries who have experienced pricing with countries that are contemplating it to have good, facilitate good exchange, and also enable high-level, leader-level dialogues and engagement on this. So lots to come in 2024. As IETA knows, we've got an independent secretariat, which is co-led by IETA and Adelphi in Berlin, and definitely really excited to have seen that independent secretariat established last year, and will certainly help to advance the GCPC. So I'll leave it there, but happy to provide more.
Thanks, Judy. It's an important one, and an important one it's at the political level now, so you watch that space. But okay, we'll go to the room, and so this gentleman right here, thanks, and then we.
Hi, my name is Bill Funderburk. I was a former commissioner of Los Angeles Department of Water and Power, and saw a lot of activity that the subnational level could take. And my questions, comments for CARB. Great job. Keep doing the work that you're doing. We love the work that you're doing. And Mexico, I lived in Aguascalientes, Mexico for 2 years. And I wanted to know why Aguascalientes wasn't there, where they're going to be. Mexico has, 31 states, and not including DFA. And how quickly you think this is going to happen, assuming Sheinbaum wins the election, and what it will look like depending on whether the president is the current president or the previous president, because the current president of Mexico, AMLO, seemed to follow what the previous president did in terms of environmental and following the fossil fuel industry, whereas the current president of the United States seemed to be more at odds with that. So thank you.
Sure. Thank you very much. Well, Aguascalientes, it's a very small state in Mexico. So far, they've been asking questions and getting some information, but so far, no initiative for a tax and crediting mechanism has been in place so far. So let's see what happens during the elections. It would look a lot different. To be honest, I don't really know if Claudia Sheinbaum wins the presidency, will we have an ETS up and running in Mexico, and how fast? Problem is, current capacities of the Ministry of Environment have been depleted in terms of infrastructure, but also in terms of human resources. So we might need at least 2-3 years to have the program up and running again if there is the political will to do so. And if that happens, that we still don't know, a very important point is the dialogue between the national government and subnationals. I think that will take a while, and Mexico will look a lot like Canada. We should have, or we might have, two different carbon pricing signals for quite a while. So subnational tax and credit schemes, they are there for quite a long time.
Yes, this gentleman. And again, put up your hands if okay. Okay, then we have one in the back up.
I was curious to better understand who has the authority to extend the program beyond 2030. And
can you speak up, please?
Sure. Yeah, I'm trying to better understand to what sort of steps ARB will take to assure the market that they have the authority to extend the program beyond 2030 and avoid a conflict with the legislature.
So that's why we've already begun the conversations with the legislature, because we want to get their input and work with them and make sure they're partners in what a post-2030 program looks like. So that's how we're going to try and avoid any conflicts.
And there was a hand, there's, Lenny there, and then there's an individual back there. These lights are really bright, if you didn't notice.
Thank you, David Antonioli. Great panel, really interesting stuff. And I have perhaps a provocative question. A lot of excitement around new protocols, and that's great. However, all good things must come to an end. And my question is for all of the panelists, do any of the protocols that are actually in place or are being considered consider what happens when the carbon party ends? When the project stops, there's no more carbon finance, what's the plan to keep the projects going, or the activities, the underlying activities keep going so that we don't revert back to where we were before? So I'm just curious to hear your thoughts on that. Thank you.
So we're grappling with this very issue from fugitive methane in California right now. We give credits for captured methane that's used for displacing fossil fuels in the low carbon fuel standard, and we also give cap and trade credits for projects that just capture and avoid that emission of methane. You can't get double credited in both of those programs. It's only counted in one program. What we're trying to do is figure out, is there enough incentive to pay for the capital cost to put in the infrastructure to capture that methane, and when that rate of return can end, and what is the off-ramp in terms of another market or another procurement mandate for methane as a fuel by the utilities or regulated entities to help them reduce their dependence on fossil gas. So all of that lead up is capital costs, what tools do we have to pay for that, and then what's the offtake once that ends and we're ready to move that project type out of the programs.
You're good? Lenny, or who? No, sorry.
Hi, Nick Berkey, City of Anaheim. Especially in California, there are typically multiple carbon reduction programs, usually ran by more than one agency. For any given sector in our economies, thus there are growing concerns about the cost borne by end-use customers and ratepayers for the goods and services that drive our economies. What are each of your agencies' positions, and what are you doing to ensure that end-use customers and ratepayers are not paying for the same carbon reductions more than once?
So ratepayers usually come up in the context of our electricity sector and gas sector, and it's regulated heavily by the Public Utilities Commission. And so they have very strict oversight and proceedings and robust public process over rate setting. For us, in the cap and trade program, we factored this into the design of the program by giving free allowances to utilities to cover what we believe is going to be their greenhouse gas liability in the program, while they're subject to other programs to reduce emissions towards renewable portfolio standard targets or SB 100 clean energy targets. They take those allowances, they sell them at auction, they return that as a climate credit twice a year to Californian ratepayers. And so we've worked closely with the PUC on the design of that and the development of that. And as we move forward, we're continuing to consider, and there's going to be discussions, I believe, with the legislature, what is the best way to make sure that we return value to Californians from these programs such as the cap and trade program.
Yeah, I can't Lenny?
Yeah, Lenny Hochschild, Environmental Commodity Partners. For a group of young people, you have a lot of wisdom and experience, so thank you very much. You're welcome.
Bless you.
So Rajinder, if you could please just walk us through your expected timeline for both the LCFS and the cap and trade programs, maybe specifically to the ultimate board votes for both, that would be appreciated.
Sure. So I'm just going to be clear. Some of us are taking vacations this year, so we're probably going to work around some of those vacation times. I know we've been working nonstop for years on some of the scoping plan work and lead up to LCFS. So we were going to have a vote on LCFS this month. Based on the amount of comments, and I think it's like over 10,000, some of them are form letters. Yeah, it's amazing. Not in a good way, but you know, it's a public process. It has to happen. We want to know what people think. We decided to pull back on the board meeting in March so we could have more public process to lay out why the package we have out on the street is the right package for the LCFS moving forward. And I know that people have focused on what they perceive as the issues or the warts on the program because they don't like dairies, which is not an LCFS problem, it's a dairy problem. They don't like biofuels, which is not an LCFS problem, it's a sustainability problem. And so we started to pull together new decks, have new conversations. Let's focus on the things everybody does want and the billions of dollars that this new LCFS is going to push into those new sectors for heavy duty, medium duty, off-road and on-road technologies. So all of that work has to happen, and it's going to happen through April. We hope to issue a 15-day notice, which is a change to the program, to the 45-day proposal. We know we're going to make some changes. We're going to showcase those when we put those out with that 15-day notice because it's a market program. We don't really try to highlight what we're changing ahead of time. And actually, Matt will be able to speak more in detail about LCFS tomorrow. On the timeline, we're still shooting for an effective date for the end of this year, or early 2025. And when I say early 2025, that's January 2nd, 2025. I know there's been some confusion. I know some of it started this week. I'm not sure where it came from, but we do rulemakings all the time. So we know how to manage and start doing work for deliverables that happen after rulemaking while the rulemaking is actually still in process. Like, we can do that. On cap and trade, we're hoping to release the snapshot economic analysis in the coming weeks. To be clear on what that looks like, to do those analyses, it's emissions modeling, it's air pollution modeling, then it's health modeling, then it's economic modeling. The things that come out in those economic analyses documents, which is that snapshot, those are baked in months in advance because you take that long to actually do those steps to get that document together to put out there. As soon as that document is out, we are also going to be doing workshops on where we want to make changes for a formal 45-day proposal. And so that will be in the coming months.
Clear? Excellent. Any other final questions? And I know we've run out of time, but we started a bit late. So like, just any other final questions? I just don't want to. It's a fantastic panel, great opportunity. If I don't see anything, maybe some final comment, just short, sweet, crisp, to the point. You have Sean Nolay. Do you have a question? Okay. All right, quick question.
Sorry, Katie, it's a question for Jean-Yves. Jean-Yves, could you tell us a bit about the interactions between the protocols in Quebec and protocols at the federal level? How do they or do they not interact together at the project level? For example, if you have as a promoter, you have a project in the forestry sector, in the private sector, and you want to get credits for this project, can you use, will you have the opportunity to use either the federal protocol or the Quebec protocol?
The sound is not good here, so the question is, if there's a project, we deliver an offset credit, will that credit be used either at the federal level or at the provincial level, or both?
Yes.
Okay. Two things to answer your question. First, the federal backstop is designed in a way that if there's an offset protocol within a province, it is the provincial offset protocols that applies, and if there's none, then the federal offset protocol could apply within the province. So in terms of issuing offset credit for a single project, only one offset credit will be issued. In Quebec, for our cap and trade program, we only recognized offset credit that are either issued by us, Quebec, or by California. When we were linked with Ontario, we were accepting Ontario offset credit. At the moment, we are not accepting the Canadian federal offset credits. I'm not saying we don't want to or we will not, but at the moment, we haven't had discussion with Judy on that one, but we don't recognize the other types of credits. If it's surrendered in Quebec, for sure it could not be surrendered for compliance in another program, because it would be double counting.
Mm-hmm.
It's a good question, and just the dynamic, including when you look at how this subnational, federal, the interplay, how that could apply elsewhere, including in Mexico or elsewhere. I mean, it's a good question and clarification. Did you want to say something?
But then if you look at LCFS, because the question came in Quebec from some of our stakeholders, if you do a mitigation and it helps you reach your objective for two different regulation that applies, then yes, one mitigation could help you achieve two different regulation, but it's not double counting. It's it's more of a two regulation applies on the same activity, so reducing your greenhouse gas emission will allow you to comply with the two different regulation, but for offset, an offset credit can only be used one time.
All right, I'm just you, only you. Given that we have come to California, and this is California, and it's a very active, intense year, like I said, and as you've explained, for you, the CARB team, right? And there's stakeholder. I knew there was a lot of letters, comments on LCFS. I didn't realize it was nearly that much. You know, you had Chairman Benham say they got 90 on the CFTC 10,000. So it's just a lot of work. So thinking about the time we are broadly on markets and the geopolitical backdrop, and that we're heading into a heavy, heavy year for WCI and California's cap and trade system. Are there any final quick remarks you want to share with just this audience here, again, of many, many players across the value chain, or watching intently to potentially get involved?
Sure. So because AB 32 was signed in 2006, we've had a long time to develop a portfolio of programs in California. There are voices that don't like the programs that we have, but the programs that we have delivered reductions and will continue to be important as we move forward. The goal has always been to see these programs picked up and used in other jurisdictions, some flavor of them. They don't have to be exactly the same, but some flavor. And so it's not unsurprising that attacks continue on the California programs as other jurisdictions look to them. And so our goal is to put out as much information as we can that factually shows how these programs can work and how they can actually dovetail with private investment, especially with the federal incentives that are out there right now, to make sure that we can hit our GHG targets and reduce air pollution at the least cost possible way for Californians. And so really it's going to be about figuring out how to help other jurisdictions pick up similar programs, but also getting the facts out at home while we're evolving our programs. It's a lot of work, and there's going to be a lot of attention on it, but I want to be clear about this. There have been 0 attacks on these programs in the last 5 years that are new. They are the same attacks we heard when we were developing the programs, and they are the same ones that will persist. There is just a fundamental difference in should we use markets or something else to get to these emission reductions that we need. We believe that markets are a key part of our portfolio.
Perfect. It's also a call to action for many, many non-government stakeholders, and I mean businesses and those involved, to make sure that they are not sitting on laurels and just expecting, assuming everything will fine and swimmingly. And we do need to lean in and support these efforts and communicate the benefits of this market on a more regular basis and across many, many audiences that might be, even newer faces, but critical faces in this journey, because we're all on a journey. And I have to say, when I first walked onto this stage, there's a lot of foliage, and I had Guns N' Roses, Welcome to the Jungle, coming to my head. And I thought, oh, that is so symbolic of just carbon markets and the journey, and welcome to the jungle in good ways and challenging ways. But I want, first of all, thank you so much to Craig and Jenny and Lauren and Reed and the whole NACW CAR team. Thank you for bringing all of us together every year. It's fantastic to see it grow, but also an absolute heartfelt thanks to my incredible panelists, who, as I said earlier, just absolutely in the trenches, working extremely hard, not for a couple of months or years, but decades now, plural. So thank you, Rajinder, Jean-Yves, Eduardo, and Judy. Thank you, sir, you couldn't be here. Bye, all.